In this video, we will look at the fourth quarter results of Big Gold, the largest gold producers in the world, looking at the underlying details of the levels and growth of production, realized prices per ounce, revenue, costs, and net income. The companies we include here in our aggregates for Big Gold are the largest producers, including the giants Newmont and Barrick, which produced 5.9 million and 4.4 million ounces respectively in 2021, Agnico Eagle, which produced 2 million ounces last year, although this will nearly double in 2022 after their merger with Kirkland Lake, and the mid-tier producers, including B2Gold and Yamana, at just over 1 million ounces each, Equinox and IAMGOLD at around 600 million ounces each, and Eldorado at 476 million ounces. We have left out the next two largest producers, Alamos and Centerra, in our review of the results, although we can see here that they are actually larger in terms of market cap currently than Eldorado, Equinox, and IAMGOLD, as production is a less volatile measure than market cap, and also when we look at the aggregate figures, it's really the top three that have the largest effect on the changes, and the top 8 already capture most of the industry shifts. We start here with aggregate gold production in 1,000 ounces in fourth quarter 2019, which is the first quarter that we can really see the industry finally exiting the long bear market from 2013 through to mid-2019. Production and production growth declined from the fourth quarter of 2019 from 4.5 million ounces and 12.1% year-on-year growth down to a trough in the second quarter of 2020 of 3.6 million ounces because of the health crisis. It then rebounds through to the fourth quarter of 2020 to 4.2 million ounces and then eases off again on a more organic decline through the second quarter of 2021 to 3.8 million ounces and has risen again to 4.3 million ounces in the fourth quarter of 2021, still a bit below the levels of fourth quarter 2019. Here we look at the production of the individual companies, with the production growth of the two giants quite limited, with Barrick edging down 2% year-on-year and Newmont up 1.5% year-on-year, while Agnico Eagle's production is down 0.1%. A lot of the growth is coming from the mid-tier, with B2Gold up 12.7%, Yamana up 10.2%, and Equinox up 56.3%, the highest of the group by far, while production is down for the two smaller players, with IAMGOLD declining 9.5% and Eldorado down 11.3%. Moving over to the other revenue driver, the realized gold price, there's been a big decline for most of the companies from around $1,860 to $1,870 per ounce in the fourth quarter of 2020 to around $1,800 per ounce in fourth quarter of 2021, with only Eldorado seeing a relatively flat realized gold price because it was much lower than the rest of the companies in the fourth quarter of 2020. Bringing together the production and realized price, we get to aggregate industry revenue, which saw some very high growth year on year in the fourth quarter of 2019 off the very low base of 2018. Therefore, the growth rate has mainly trended down since. However, in terms of absolute levels of revenue, there is a big pickup from the third quarter of 2020 when the gold price really took off. And while the gold price did come down through the second half of 2021, absolute revenue in 2021 was still up 3.2% above the 2020 level, and fourth quarter 2021 revenue was the highest in recent years at $9.6 billion US. Looking at the revenue growth by company, Barrick grew at about 1% and Newmont by 1/3% in the fourth quarter of 2021 year on year, and Agnico Eagle grew 2.2% year on year. The mid-tier companies had strong growth, with both B2Gold and Yamana up over 9%, and Equinox had the strongest growth of the sector by far, up 50.9% year on year, while there were revenue declines for the smaller producers, including IAMGOLD, which was down 15%, and Eldorado, which was down 12% year on year. Looking at costs, we can see that overall there's a pickup year on year for most of the companies in fourth quarter 2021, although B2 Gold and Yamana have seen declines, and Barrick and B2 Gold have remained the low-cost producers. IAMGOLD is the highest cost producer by far and saw over a $200 per ounce rise in costs since fourth quarter last year, and Equinox is also seeing quite high costs versus the rest of the companies. Here we bring together the average gold price and the all-in sustaining cost per ounce for the large companies, weighted by production, which gives us a simple spread indicating how strong the industry margins are for big gold. We can see a large increase in this spread from around $400 per ounce in the first half of 2019, more than doubling to a peak of over $800 per ounce in the second half of 2020. And while it has contracted a bit in 2021, it was still at a very strong $740 per ounce in the fourth quarter of 2021. Looking at aggregate net income, there are very large percentage gains from the fourth quarter of 2019 to the second quarter of 2020 off of the low base of the first half of 2019. And while percentage gains started to come down from the third quarter of 2020, absolute net income peaked in the second half of 2020 at above $2 billion in both the third and fourth quarter. While absolute net income has come down since, some of this has been from non-recurring items, particularly in fourth quarter 2021 from Newmont. The large effect of the Newmont extra item on the aggregate net income for Big Gold can be seen here, with net income for Newmont declining substantially on reclamation and remediation non-recurring costs in the fourth quarter of 2021. If we were to adjust for that, we would have likely seen the strongest quarterly net income growth for Big Gold since the fourth quarter of 2020. We can see here how volatile the net income is for most of the companies, with much of this coming from exceptional items and not necessarily reflecting the operating cash flow generation of the companies. The continued strong performance of the major gold producers has a strong read across for the junior gold miners, with the majors seeing an increasingly high cash balance, much of which they will put into acquiring new promising projects, which will continue to support the major surge of investment into juniors we've seen over the past 2 years. For an overview of the largest junior miners on the TSXV, see our new report which will be issued soon on the TSXV Top 50 Metal Miners, which also covers silver, copper and other base metals, streaming and royalty, lithium and uranium companies. The TSXV Top 50 Metal Miners product will be available on our website www.canadianminingreport.com soon, and we have a free weekly report and other long-form regional reports on junior gold miners there. Also, we are very interested in your comments, so feel free to leave one below the video.